Well, how's it going, investor fam? 2022, a year of volatility, inflation, rising rates, hopefully still tons of gains, and Uncle Henry is buying $1.3 million worth of Tesla options. I'll get to that in just a second. I've got an interesting stance on Tesla, and I'm bullish despite Elon Musk selling a lot of shares. Check this out.
Shares in his company worth about $1 billion, calls his broker. Sell me 934,000 today. Broker goes ka-ching. Musk has been on a selling spree since early November, partly to pay his looming tax bills on his stock options. Speaking of those options, he exercised another 1.6 million at a strike price of $6.24.
Elon sold 15.7 million shares of Tesla while buying/exercising 22.9 million more shares, ending up with more than 7 million more shares than he has started with. So why is everyone panicking? For everyone panicking, the big picture is looking better than ever, but they just don't realize it, which is really weird. Elon only sold due to taxes. I expect 1.9 million to 2 million deliveries just this year. So when we go over technical analysis, you're going to understand what my fundamental analysis outlook for Tesla is. They increased production capacity by almost 70,000 this quarter. That should increase the first quarter as well, since production at Berlin and Austin will come online in the first quarter, which would put them at a run rate of about 400,000 cars per quarter. 400,000 vehicles times 4 quarters is 1.6 million, without considering Austin, Berlin, and Shanghai's continued ramp up after the first quarter. So I'm super bullish on Tesla and want to show you how I'm playing it with options and why I have such a big position in the stock. In fact, my optimism is high even though the stock has recently seen a huge rise on the first day of 2022 trading year and remains above $1,000 despite a recent pullback after that first trading day. So is Tesla a buy? Well, let's look at the facts. Tesla Model 3 was the UK's second most popular new car in 2021. Elon Musk says Tesla will raise price of full self-driving driver assistance to $12,000. That's a huge sign of confidence. Tesla reported blockbuster fourth quarter delivery volumes of 308,600 vehicles, surpassing bull case consensus estimate of 290,000 vehicles. Lastly, even in my bear case scenario, I ran a valuation model and I'm targeting $1,300 per share at worst. So with that being said, let's jump into my screen and take a look under the hood. All right, guys, so currently I already have a large position on Tesla. I currently have 520 shares. It currently compromised 100% of my portfolio. However, that's incorrect. For some reason, Robinhood is saying it's 100% of my portfolio, despite, obviously that not being the full amount of my portfolio if you're a regular viewer of the channel. I'm up a really good amount. My average cost is under $600, even after I've been buying Tesla above $800, $900, and even $1,000 per share, because I've been in this position very early on and I had a lot of conviction on this play since basically the end of 2019. Now, scrolling down, I want to show you my 5 different option strategies. And as you will notice here, the current cash collateral is $1.29 million. So very heavy into Tesla. I'm going to go over more on the technical analysis in just a second on why I have so much conviction in this play. But essentially, a couple of strategies that I'm running. I mean, the main current strategy that is taking most of this cash collateral is going to be these 12 puts that I sold at $1,000. Now, I do have a put credit spread. I'm going to have a put credit spread video link for you guys in the description. Put credit spreads are fantastic. In fact, I'm going to quickly show you this position right here. I'm up $11,690. This was a position I only had to put $18,000 into, made $11,000 on that $18,000. So about a 63% return in the past 6 months. I did have this trade in the Discord. So, if you want to follow along with my trades, then make sure to check out the Discord link in the description. Now, I'm specifically going to focus on this $1,000 put option. So what I'm doing here is I'm selling put options and I'm looking for an optimal entry into the stock. Why buy a stock for the current price when you can literally get paid to buy a stock for a lower price? Guys, selling put options is literally a cheat code. There are basically 2 reasons to sell put option contracts: to generate income or to acquire shares of a stock at a discount to the current market price. Being paid to insure someone else's stock. So you're being paid to insure someone else's stock, because if you're selling a put, well, who the heck is buying that put? Well, the person or the hedge fund or the mutual fund or whoever it may be is buying a put option to hedge their portfolio. They may have a large Tesla position, so they're buying put options for protection. However, you're there selling it and getting stupid rich. You're being paid to insure someone else's stock when you're selling a put option, and you're also being paid for offering to buy someone else's stock for lower than the current market value. So while they're panicking and they're afraid, hey, Tesla might fall, you're there with the kahunas. You're there ready to purchase that stock. I really like the insurance analogy because the insurance industry is super profitable. Now, selling puts is basically like selling insurance. Someone is buying insurance to secure Tesla stock at $1,000 per share. So if Tesla goes down to 900, they're securing themselves that they're going to get at least $1,000. However, we here on the channel are bulls on Tesla, right? Or even if you're not a bull, you can run this strategy on anything else. But essentially, when you sell a put option, pick a strike where you'd be happy to purchase the stock. So at the very worst, you purchase a stock that you want to buy anyways. And at best, nothing happens. You just get paid to sell a put and the stock doesn't even go down to your strike price. And actually, guys, I don't know if you know this, but selling puts is a secret way that Warren Buffett got rich, and he did that with Geico. Warren Buffett got very rich with the Geico money he pulled in through premiums, just like I'm about to teach you. When I open up my history shortly, you're going to see how much premium you can collect off of Tesla or even another stock like say Palantir or NIO or any other stock that you wish. Now quickly, I'm gonna run through the technical analysis because you need to understand why I picked the $1,000 strike level, because picking a strike is very important when you're selling put options. You don't want to sell a put option on a strike that's just too close to the money, and then you end up buying a stock for a price that you don't want. You need to determine the strike price that you want, and you need to use technical analysis to do that. Now, taking a look at the Tesla stock chart, okay? I have a couple different indicators here. In fact, I'm going to talk about 3 different ones. The first one is moving average. Now, obviously, Tesla is a huge momentum stock. I mean, this thing was around $700 just in September. Now, in the past 3 months, it went from $750 to over $1,000. Now, at these levels, at the $1,200 level, I actually ended up selling covered calls and I got out of my position at around $1,100. Looking back, that ended up being a really good decision. Although it was some taxes, I didn't fully do it on purpose because that covered call got executed on a Friday. It ended up being a really good decision and I was pretty spot on with exiting Tesla at a good price. However, looking at the market, I'm still really bullish on Tesla. I don't really have a better opportunity for a stock that I want to invest in, so I'm looking to get back into Tesla. However, in the past couple of days, Tesla was trading over $1,100 per share, and I felt a little dumb buying it for higher than I sold it for. So rather than doing that, I ended up selling put options, as you guys know, and I had to pick a strike price. So here's how I determined what strike price to sell the puts for Tesla. And this is very duplicatable. You can copy this similar strategy on how I use technical analysis on Tesla, and you can apply it to any stock that you wish. Looking at Tesla, we had a very big spike up here. I mean, we basically touched $1,200 per share as a close on January 3rd. However, I wasn't convinced. I didn't want to buy it because right here, as you guys can see, the Bollinger Band top, by the way, this is a Bollinger Band. It tells you where a stock is likely to trade within. This is an indicator that I use all the time for trading options. Bollinger Bands are fantastic for understanding when to potentially exit a stock or when to potentially get into a stock. For example, right here, we were getting really close to the bottom of the Bollinger Band. And these levels right here all proved that they were pretty good levels. And right here, since we were at the top of the Bollinger Band, we also kind of had an idea that Tesla was becoming pretty expensive for that time in early November. So currently, taking a look at the Bollinger Band, we're sitting right in between, which means that it's not currently a good time to buy or sell Tesla. It's right around where it should be for the present moment. It's currently trading for roughly fair value in the short term on the technical chart. Now, this doesn't mean that Tesla is not going to grow into the future, because obviously I think this stock can be a $2,000 stock in the next couple of years. And also my bear case scenario is $1,300 by the end of 2022. So about a 25 to 30% return potential still for Tesla, which is an amazing return. But taking a look at the Bollinger Band, we're right in the middle. So I don't expect a huge move higher, nor do I expect Tesla to move a lot lower. Now, the other indicator I was discussing is the moving average. So if I scroll in and actually zoom into that 3-month chart, you're going to see that currently the moving average is about $1,073. Now, Tesla is currently sitting at $1,026, and it currently has gone lower than the moving average. So for me, this is a bearish sign in the short term. However, in the long term, this is fantastic because what most people paid, and this is what moving average really is. It tells you where the stock has traded for the past, I put 50 days. You can put 30, 60, or 90 days. So on average, in the past 50 days, you're getting a better price than everyone else paid in the past 50 days for my current screen. So I'm pretty excited about that because I'm getting a better value than other investors. Everything is fairly relative. So Tesla is under the moving average of $1,073 and it's right at the Bollinger Band. Now the third metric that I do look at is the RSI. For the RSI, I want to see a stock that is not overheated. So for example, this is another reason why I sold Tesla stock. It was overheating. It was basically too hot. It was on fire. It was above 80 RSI back in late October / early November. So for me, it was a clear sign to get out of the stock because it has become too hot for its own good. I mean, where else can the stock go when the RSI is above 80? I mean, yes, Tesla can go up to 90 RSI, but I don't want to play the game of buying an expensive stock and hoping that it gets more expensive. And again, I'm pretty much the biggest bull ever on Tesla, but still, I recognize in the short term when a stock is approaching a potential peak. So because the RSI is currently sitting at 47, I'm more than happy to start jumping into Tesla again because I believe for a number of reasons that it's fairly valued, and in the long term, it's obviously at a huge discount. So for me, I decided to go for something really easy in a really nice round number of $1,000 per share. This is also about a 10% discount from where I sold Tesla at $1,100 per share, as well as collecting premium off of the previous covered call I sold. Now, I sold the $1,000 put option. I want to jump back into my screen because I want to tell you guys exactly how much I collected on selling this $1,000 put. Now, something that you guys are going to notice here is that I'm down currently $45,540 on this position. However, I don't view this as a loss because I'm looking to purchase shares of Tesla. I don't care if the option position says that I'm down $45,540 because this would only be true if I was just looking at the put option as a standalone position. If I was looking just to sell a put and then close a put for a profit, then yes, this would be a loss. However, that's not what I do when I sell puts. When I sell puts, again, when I sell puts, I'm looking to get into a stock for a lower price and get paid some handsome, and I mean super handsome premium for it. I'm going to show you how much I collected total on this position. So as you guys see, my current Tesla break-even price is actually going to be $961. Now, why? I sold the 1,000 put. Well, the reason why this says 961 is although I sold the $1,000 put, I've collected about $39 per contract, which means that my actual break-even price, accounting for the premium that I've collected, is $961. Now, taking a look at my history, this is what I did. On January 3rd, yes, I slightly traded Tesla when it was at its peak, nearly back at $1,200 per share. I ended up selling puts. However, check out how advantageous it is to sell puts. Although I sold puts on a pretty bad day, on January 1st, the first trading day of the year, when Tesla was about $1,200 per share, and now it currently sits at $1,027 per share. It's literally pulled back about 15%, okay? Literally a 15% pullback, and I'm still not in the money, which means that Tesla's currently still above my strike price. Tesla's sitting at $1,027, but I have to purchase Tesla at $1,000 per share. So even though I picked a bad time to sell puts, I still got paid a lot of money, and I'm currently still sitting very pretty. Although it says I'm down money, I'm actually not down money for two reasons. One, I'm ready to buy the stock, and two, I'm actually still out of the money. So technically in the next few weeks, as we approach February 18th, if Tesla just stands still, if it just doesn't move at all, then this option will actually gain $91,920. It will completely decay due to theta as long as it stays out of the money. So now going over into the premiums, I ended up collecting $39,500 off selling 10 contracts. And then I actually added 2 more contracts for $6,880. So combining $6,880 and 39.5, I made roughly $47,000 just for doing a 1.5 month option, or basically over 6 weeks, I'm collecting $47,000, which is roughly $8,000 a week. Now, obviously you don't need a large portfolio to do this. I do have a large portfolio, but you can duplicate the same strategy and make consistent weekly income by selling puts on a number of different stocks. Selling puts is one of my favorite strategies, and this is what I do all the time, every single week in my private Discord community. So if you're interested, make sure you check out the link in the description. And also, if you want to master selling puts, check out this video right here.